Hi, I'm Ben Rippon. Welcome to my YouTube broadcast. Today is April 19, 2023. This is my market insights. So I'll begin with this slide, which is a dashboard covering 4 U.S. equity indexes: the Dow, the S&P 500, NASDAQ 100, and the Russell 2000 Small Cap Index. 2 foreign indexes, EFA for the developed markets and EEM for the emerging markets, and TLT for the long-term government bond. These are all ETFs. The center part of the dashboard is in yellow and pink, and the yellow is what went on for the past week. And you can see very little change, mostly slightly up, and the government bond was down. Actually, it was down 3%, so quite a bit down on the government bond. And then the pink box shows the year-to-date ranked from the best to the worst. So you can see with the NASDAQ 100 and the developed markets, foreign markets, up 19%, up 11%, and then they go from there all the way down, the S&P at 7.8, all the way down to the Russell 2000 at a gain of 1.23%. All of them are above their 20, 50, 100, and 200-day moving averages, except for the government bond, which is above 2 of them, and the Russell 2000 Small Cap Index, which is below all 4 of them. Everything else is above all 4 indexes. So this can change, but right now, the reading as of this past Friday is positive. The market is moving in a positive direction, and the biggest laggard is the Russell 2000 Small Cap Index, and then there was definitely a pullback in the government bonds. Everything else seems positive at this point. When we take the S&P 500 and break it into its component parts, you can see that the sectors in the S&P of how they are doing, we'll look at the weekly, and we'll look at the year-to-date, and then we'll look at the where are they relative to the 20, 50, 100, and 200-day moving averages. So in the weekly, you can see it's mixed. Some of the sectors were positive, some were negative, none up a lot, none down a lot. Generally mixed. And year-to-date, again mixed, going from the strongest, which is technology and consumer discretionary, and then it drops way down below that and into the rest of the sectors. And 4 of the sectors are actually negative year-to-date. So you've got 2 growth components in consumer discretionary and technology that are pretty much carrying the market, a lot of it. And after that, it drops off quite a bit. We get into the charts, and you can see that this is a 15-month weekly chart. 1 move equals 1 week. I drew a black arrow so you could see the S&P 500 from its low point in October until today. So it's gone up and down since October, but generally speaking, the trajectory is in an upward direction. And you can see at the very end of it, the little tick up at the end, that is this past week. When we get to taking the S&P 500 and then breaking it apart into the growth kinds of stocks and the value kinds of stocks, what I do is a relative strength on that, putting growth as the numerator and value, as the denominator. You can see that I draw the black arrow at the end of it, and you can see that growth is outperforming value, and so causing that line to go up. When we look at, remember in the first chart, we looked at the very first dashboard, and remember where at the very bottom was IWM, the small cap, Russell 2000 Small Cap Index, the worst, and S&P was pretty strong. This puts that on a relative strength chart, so putting the S&P large cap stocks as the numerator and IWM small cap stocks as the denominator, and you can see the degree to which the large cap stocks are outperforming small cap quite a bit. And if we did something like the NASDAQ 100, for example, relative to small cap, the difference would be even more exaggerated. Looking, this is an absolute chart, not a relative strength. Looking at the long-term government bond, you can see at the very end of the chart the tick down. And that's because there was a drop in the value of the bonds this past week. And when you go all the way back to November, you can see from November to present that the long-term government bond, and this is probably also true of the intermediate term bond, has gone up and down in value. The ETF has gone up and down in value, really kind of directionless. And that's why I just drew that line to show going across that it hit a bottom in October and then came up and it kind of stayed there. So it's not rallying like equities are. The dollar is continuing to decline. And I think this is tied to the oil production. And there's a deal was made between Saudi Arabia, China, and Russia, perhaps India, where they would buy oil from Saudi Arabia and be denominated, I believe, in yuan. And so this has been, and that happened at about the time the dollar began its decline. So they have bypassed the use of the US dollar rather than buying oil in dollars, petrodollars, which has been the case for decades. Now they're trying to bypass that, and of course that weakens the dollar and is not going to, I don't know the trajectory is going to change. It's not going to be good for the dollar long term. So this chart shows that. The gold continues, gold and silver both continue their upward trajectory. This is a continued flight to safety. So you go from where the stock market was at a bottom in October. And so in October, you can see from there, gold just took off and has moved upward. Again, I think flight to safety. Silver, same thing, except, and I can't explain this, silver had a drop in January, February, up to early March, mostly for the months of January and February, a drop, kind of a large drop, and I can't explain it. But then it hit a bottom and has surged up and is now moving up faster than even gold is. But the general direction for silver is in an upward direction. When I put those on a relative strength chart, you can see you see that decline, the January, February decline. But with silver being the numerator, you can see the degree to which it has outperformed gold in the last month and a half. Bitcoin continues to do well. It from the beginning of the year and is up significantly. Doesn't look like a big move, but it percentage-wise is quite a bit. We have a Bitcoin or a managed crypto model, investment model, and that model is up over 50% since the beginning of the year, and stayed out of the market during the last. We only went into it last year, so during the last quarter of last year, it was out of the market. But then when it got in the market in January, has participated in a lot of this increase. So from that perspective, it's nice to see this up. Volatility index continues to decline. So what this means is that the market is if the market is up and there is lower volatility in the market, lower downward volatility, this will cause the volatility index to decline. When there is risk that enters the market, then the volatility index tends to go up. Asbury Research, through last Friday, all 6 indicators are positive. Again, echoing what I just showed in the volatility index, as well as the previous charts and dashboards. The relative performance, cross-asset relative performance chart, I'll go through this. So the last 3 columns cover the last week, the last month, and the last quarter. So stocks are stronger than bonds. Large cap is stronger than small cap. Developed countries, mostly Europe, developed countries are ahead of the US. I should say Europe, I'd say, and Japan. And then in the emerging markets, the US is stronger than the emerging markets. In bonds, the short-term bond prices or value is stronger than the price for longer-term bonds. The US versus the world, if it is significant, this will get a green box. So you can see a lot of these are, fewer in South America, many of them are in Europe. So echoing what we've seen in the previous data, the European market is a strong market right now. Okay, to illustrate what I just talked about, I selected the country France. I've been showing this for the past several weeks. So I took France, represented by the ETF EWQ, relative to SPY for the US. So France, EWQ, is the numerator, and SPY is the denominator. So when it goes up, that favors France. When it goes down, that favors the US. So relative to France, here's where the US market is. So France has been significantly outperforming the US for over 6 months, so about 7 months. So that's just an example, one of the countries from that previous world map that I thought was a good representation of the difference. As I said, the precious metal market is up. So these are gold and silver prices. Gold price spot as of last Friday was $2021 up slightly from the previous week. Silver $25.64 for spot, up 1.6% from the previous week. And the gold-silver ratio is about 78 to 1. That has come down from 91 to 1 a few months ago, just a couple of months ago. So why? Because silver has been going up and causing that ratio to come down. So as long as that's, in my opinion, as long as that's above 40, that favors buying silver, because silver, therefore, would be a better value with a ratio like this. Then I show a monster box of silver, generic silver, and it could be Maple Leafs or the Britannia from the UK, etc. But it's not Silver Eagle. So the price of a box of silver bullion as of Friday was $14,840. That's down a little bit from $15,000, and that drop is due to the fact that the markup has come down. The markup over spot was $4.04. So that was down from about $5, over $5 a week ago. So using a box of 500, the cost is $29.68, which is the price of spot plus the $4.04. And for a tube, container, about 20 cents more per round, $29.88 for a tube of 20. And I got this from my son, Preston, who's in that business, and he supplies me with this information so that I can pass it on to you. I am a fan of buying local, and I'm a fan of buying from brick and mortar, not over the internet with somebody that you don't know. Most people in the business are honorable, but I have heard of stories that have been not good stories where people have been taken advantage of, and that's why I like to buy local and like to buy from a brick and mortar company. Now, I give you these prices because it gives you a context so that if you're buying local and you're shopping, I mean, the product you get is the same. So in a sense, it's kind of a commodity. So, but it gives you a benchmark. It gives you, here's a number that you can work from, and if you're close to this number, if it were me, if I were close to this number, I would probably buy local and buy from a brick and mortar company. So hopefully that's helpful. Thank you for watching. If you have comments, leave them in the comment section below, and questions, I'll be glad to answer them. Thank you very much.